Kia ora everyone, welcome back to our next edition of Econ Talks. Gareth, we've had the latest data on construction activity, not just intentions to build like we get with consents, but this is work actually put in place for the December quarter, one of the last major components of the general economic story for New Zealand for the end of 2023. The results certainly not looking all that great overall, a contraction of 0.1% in overall construction activity. A bit of a mixed bag though when you got below those headline figures.
Yeah, that's right. If we look at the residential side, new residential activity was down on the previous quarter, continuing a trend we've seen for a few quarters now. We know that consents peaked back in the middle of 2022, and so there is a softening coming through. Still a pipeline of activity to be worked through in that residential space, but there is a clear downward trend that has been developing in terms of new residential activity. That was counterbalanced to some extent by the fact that there was a 20% increase in the value of alterations and additions work in the residential space. And I think what we're seeing there is with tradespeople having less work to do building new homes, they're now becoming more available for people to come in and do those alterations, those additions, those smaller renovations that typically tradespeople can be hard to get hold of when everybody's running hot, running around, and those jobs typically tend to have a lower margin and just be a bit more difficult and fiddly all round. So mixed there in that residential space. Non-residential, that was the area that grew over the quarter when we look across all non-residential activity, up around about 4.5% from the previous quarter, and still up from a year ago as well. Now, what was interesting there was the previous quarter we'd seen non-residential activity looking like it was peaking, it sort of was leveling off, but this was a bit of renewed strength coming through again, just suggesting there's still activity in the pipeline to work through there, even though we have seen a definite softening in non-residential consents through 2023. It's yet to come through into actual work being done.
You're right. I mean, like you say, sort of a 2.4% fall in residential activity quarter on quarter, but a 4.6% bump upwards in non-residential. I mean, obviously with that lower level of residential activity, not sort of the greatest news when you've got the strongest population growth, going back sort of 70, 80 years or so. 146,000 more people in New Zealand at the end of 2023 compared to 2022, but construction activity for actual dwellings falling away. I mean, yes, those renovations are good and sort of highlights that consumption hasn't completely tanked, but obviously those interest rates are having a continued effect on the residential market. I thought it was interesting in that sort of non-residential space, there were some areas that had some pretty big uplifts. You looked at the likes of health buildings, of course, hospital activity continuing, particularly in the Lower South Island around Dunedin, the likes as well of offices and public transport buildings, but one of the big ones being around what we term sort of social, cultural and religious buildings, sort of some more of that civic infrastructure seeing a pretty big boost. Looks like the likes of the stadium build in Christchurch, for example, bolstering those. I mean, some of these figures are quite lumpy, but I mean, how did these sort of figures compare to what we were expecting? You noted before that when we looked at our expectations from the September quarter, we weakened things there. It looked like things were peaking a bit harder. Obviously, a little bit of a different result coming through in December.
Yeah. Particularly surprising, I think, on the non-residential side when we had that steer that things might be just sort of peaking and leveling off. This was well above forecast. I think roughly about 20% above forecast on the non-residential side, and so there is more activity going on than we had anticipated in terms of the impact on overall economic activity or GDP. It has also led us to revise up our estimates for December quarter economic growth because it was so far above expectations on the non-residential and those residential alterations and additions as well. So there's still activity, still momentum in the economy there. I mean, our overall GDP estimate for that quarter now is just slightly positive. We had been looking at a contraction previously, but it's not much above zero. And I think the critical thing when you look through some of those other sectors that feed into GDP at the moment is, gee, if you're trying to get money out of households in terms of household spending, whether it's the sort of retail sector, hospitality, accommodation, and getting into sort of arts and recreation services as well, those ones are really showing signs of struggling with the squeeze that is coming through on household budgets. It is sort of more business to business activity which seems to be holding up the economy at the moment. And the other factor, of course, to bear in mind is, like you said earlier, just how strong population growth is. When you factor that into the general weakness in terms of retail spending, for example, those numbers look even worse or much worse on a per capita basis as well.
Well, absolutely. I mean, the fact that you might just have headline GDP edge up just above the line when you've still had a good, probably 25,000, 26,000 people in the quarter added to the population. You'd generally expect that everyone has to spend a certain amount of money to live, and that flows through into the economy. And while that might be happening, we're also, like you say, seeing those sort of pullbacks at a household level on other spending. And so there's sort of a continued tension, and that will sustain for this year between those higher interest rates that are pulling back on household spending and that higher migration, which is trying to boost aggregate spending at least. But certainly people are having to be more careful with their money. We'll continue to assess how all of those different trends go, what the latest GDP figures are, and how much we're building both in residential and non-residential spaces on one of our future editions of Econ Talks.